Unlock the high returns of the expanding venture capital world right here on the Emerging Managers Podcast.
So Scott, we've got Felix Hartmann, Hartmann Capital, and as you said to me before we started recording, this guy's on the bleeding edge of innovation. We talk to innovative investors all the time, but this guy really knows his stuff.
And this guy is so much in the future. I almost thought I was in a time machine talking to him. From 3D printing and being on the cutting edge of that to what he's doing in gaming and how it relates to VR and AR. I thought the whole headset thing was a thing of the past. It was a fad, and he brought a whole new perspective into where it's going. And, he obviously understands how crypto and AI play into all these things. And I had to put my big hat on, in my conversation with him, because he really knows his stuff.
Well, it fascinated me because I since I stopped writing my Inc. column on innovation, gosh, it's probably now been about 3 years since I last wrote my any articles for him. And so I haven't gotten to talk to these kinds of people in a while. And so, but you have to really, when you're talking spatial computing, 3D creator economy, like on one hand, and then you're talking AI and Web3, like you really have to start to see the interconnectedness of it. And I think that's what he does brilliantly.
Yeah, he definitely understands the frontier. He understands what's next. And I think that's critical when, investors and funds are trying to get alpha. You got to be ahead of the curve in terms of, you don't want to, you can make money following the pack. You can make a fortune leading the pack.
That's right. Well, Felix Hartmann is an investor and founder of Hartmann Capital, a frontier tech VC firm investing in AI, spatial computing, and the 3D creator economy. Let's hear from Felix, and then let's talk some more about this frontier tech right now.
Well, hello, everybody. My name is Scott Kelly, the founder and CEO of Black Dog Venture Partners and your host for the Emerging Managers Podcast. And I'm really looking forward to having a great conversation with Felix Hartmann from Hartmann Capital. Felix, welcome to the show.
Thank you so much for having me, Scott. Excited to be here.
Well, Felix, tell me a little bit, before we get into the fund of what you're doing now, give us a little bit of background. Tell me what you were doing before and leading up to where you're doing now.
100%. So I've been a futurist my whole life. When I was young, I would be building robots with my brother, making websites. I was like, an 8-year-old studying, the future and AI in books like Ray Kurzweil's The Singularity is Near, The Age of Spiritual Machines. So I was always really much drawn to the future and seeing how much things will change. And I grew up on movies like I, Robot. I think it was 2004, based on Asimov's novel. And so as I graduated high school, I thought to myself, what's the best way for me to express this passion? How do you utilize this passion and skill set for predicting future trends? And I realized that investing was the best way to do so. And ironically, not ironically, naturally at the time, as an average 18-year-old, I had about $950 to my name. And so the best way to get started is not with VC, but rather just like public markets. So the first stock I ever bought was Tesla, but it was in 2012, long before, much of the growth of Tesla has happened. Because back then I thought, well, electric cars, that's such a foregone conclusion of all with long enough time horizon. And something like an Elon was already standout back then, because even back then he started messing around with SpaceX, getting the first rockets to space. So anyway, so that got me into trading, investing. Of course, just as a PA, just like any person, a regular person has investments. The breakout for me really was in 2015, 16, 17. I was an entrepreneur first, actually, where I was a CEO of a crowdfunding platform where we had integrations with Bitcoin. So essentially people said, we'd love to use a platform, but can we use Bitcoin as a source of payment? And so that put crypto on my radar. We were working with Coinbase and BitPay at the time. But this was the time when Bitcoin was maybe $200. It seemed dead. Nothing was going on. All of a sudden, go from $200, $300, $400, $500, $600, $700. And that's when a trader in me, the investor in me, woke up and said, wait a second, there's something going on underneath the hood of this technology. I got to look into this. And the more I looked into it, the more I realized, wait a second, this is one of those 0 to 1 moments. I have to go all in and figure out how to, trade this market, invest in this market, be early. And essentially that culminated in me launching one of the first crypto asset hedge funds back in 2018. Again, because I didn't come from crazy connections or wealth. I started very simply. I started with $217,000 out of my bedroom, one-man show. And then I grinded that month by month, LP by LP, one win at a time, to roughly about 40 to 50 million in assets under management now. And it was in 2021 that the term the metaverse became pretty big in the Web3 space. And so we were trading those tokens, but the more I studied them, the more I realized it was mostly smoke and mirrors. It was a lot of things that was pretty worthless. You had these virtual worlds worth $10 billion, but they had 2,000 users. But coincidentally, as I started forming a thesis around this idea of a spatial internet, around the idea of gaming becoming the new social media, the more I realized there's something true to it. And the truth to it was things like Roblox, Minecraft, Fortnite, right? These platforms where Roblox alone has 350 million monthly active users, which is the population of America, right? Of the United States. And so there's clearly something real there. It just wasn't the Web3 version. And so all this culminated me realizing, wait, there's an opportunity here, but I need a different fund. I need to become a VC, not just a hedge fund manager. And I launched my first venture fund that allowed me to play equity, not just tokens, long-term games. Because as a hedge fund, you report monthly. Every month, investors can decide, I want to get out, I want to get in. But as a VC, you need that 8 to 10 year buy-in where it's like, we're playing long-term games. And I want to be early. I want to be the first check-in if possible, like in a pre-seed seed stage. And that's how we launched the venture fund. But now we're in venture fund 2. So we know we've been on this now for 3 years. So fund 1, fully raised, fully deployed, now into fund 2. And yeah, I've been talking so much. I'll take a break because I'm sure we'll get into the
No, I appreciate the enthusiasm. There's a lot of things that attract with my history and yours, and I really appreciate that background. So, talk to me about. Well, let's go to Fund 1. Let's talk about some of the wins from Fund 1, and then we'll jump into Fund 2.
100%. So Fund 1 was launched under that specific thesis where we said the metaverse is real, but to us, the metaverse was this digitally native world where people care just as much, if not more, about the digital world than the physical world. Mm-hmm. And a few portfolio standouts, it's only been 3 years. So, there are the winners in terms of returns. And it's like one of our biggest outliers, and that one has been a company called Cookie3, which essentially is a Web3 project that brings on-chain data, structures it, and makes it usable for AI. And so we were the first investor in that company. We came in at like a $6 million pre-seed valuation. The company's now worth around $200 million, and it's actually liquid, since it's publicly traded. So that's been a massive, 26x plus more than markup. Not just markup, but also some realized gains there. So that's been a big portfolio driver where we identified, hey, if you want to run AI agents, a lot of agents can't have bank accounts because to have bank account, you need to be KYC'd. So it actually makes a lot of sense for agents to have on-chain infrastructure. They can have their own wallets, they can do their own transactions in between each other, right? And so then how do you enable agents to really engage efficiently on-chain, right? And who provides the data for that? And so, Cookie3 was the right fit for that. Then, of course, there's other companies where they've got just incredible fundamentals, incredible growth, but it's only been 2 years or 3 years, so like we don't have the 20x markup on paper to show for it. But one of our portfolio standouts certainly is DressX. So DressX is the leading digital fashion technology company in the world. Essentially, when we first so what is digital fashion, right? Anytime you wear an outfit in a world like Roblox or your little Bitmoji on Snapchat or on Instagram, on Meta, right? You can actually buy outfits for them. And what's crazy is that back in 2022, when we first backed them, they'd sold maybe 300,000 units of items. Then in 2023, it was about 2 million items distributed. Last year, it was 78 million units distributed. 78 million, which is, and some of these things, they don't make sense to anybody that is either over the age of 25 or under the age of having children that are 15 years old or 10 years old. Because I have several LPs that like Fund 1, they're like, I don't quite get it, but I trust you. By the time Fund 2 came around, they said, you don't have to tell me, I've got kids. And they're on Roblox every day. Every weekend they spend all their savings. They're spending on like outfits, on mini games, on things like that. Like again, in these virtual worlds, because to them, one of my LPs, even I've mentioned this twice on the podcast now, but it's such a funny story. He mentioned his son met 3 of his last girlfriends on Roblox, right? And so to us again, going back to this thesis where the metaverse is where the digital world matters just as much, if not more, than the physical world. It means the digital world is where we make all our relationships. And then we go offline and meet them, right? In the past, we would meet offline, like you meet your neighbor, your schoolmates, and so forth, and then you connect on Facebook. Today, it is you meet in the digital world, and if you really like each other, you might hang out offline. And then on the flip side, when I was in school, kids cared about like, are they wearing the cool new Jordans or the Nikes to school, the shoes, right? That was signaling that. Today, it's more so about like, what skin in Fortnite do you have, right?
That's so funny you say that, because my both of my sons, God knows how many thousands of dollars they spent on skins and other in-game purchases on Roblox and Fortnite. So you're absolutely right. That's a digital marketplace. And quite frankly, my girlfriend I met through her aunt on Facebook. So the reality is my real world romance came from social media. So I definitely track with those two things you say. Absolutely. So
yeah. And so this was like the thesis for Fund One, essentially. Like, how do we? So if this is the trend is that Generation Z and Generation Alpha are full digital natives now, right? Where they form their relationships there, they do their business there, their social signaling happens there. Like, so much of the economy, so to say, is moving digital because that's where the value is perceived and created, right? How do we back the infrastructure for that? And so in Fund One, a lot of that was gaming. It was virtual reality, where we said, look, Facebook rebranded to Meta. They're betting the whole company on virtual reality. Apple, the first hardware product in 12 years was a VR headset. And I know a lot of people look at this and say, it seems like a gaming tool. It's very nerdy and geeky, and like, I don't really use it. I get sick when I use it, right? But the reality is, you look at the statistics, and essentially it has massive product market fit with Generation Alpha. So Generation Alpha essentially is age currently 15 and down, roughly. Sure. And for them, because they grew up on it, they don't get sick. They can spend 2 hours, 3 hours a day in there. And there's actually the first big breakout titles. Like, for example, there's a game called Gorilla Tag, which essentially is just a social sandbox. Kids hang out, they play the game tag, I got you, right? They hang out, they go to virtual beaches, to virtual jungles, and they just have fun and hang out. There's no core game loop. This game has 1 million daily active users. So there's 1 million kids strapping on the VR headset every single day to play this game. And this game is free, yet it made over $150 million in revenue, again, selling in-game outfits and so forth. And so a thesis is, if Fund One was everybody is short VR, we are actually very long VR, because we think it's one of the most underpriced segments in the tech space.
It is interesting because, VR had a real big run for a while, kind of fell out of favor, and now it's looking like it's taking another run, which I think is pretty exciting. So obviously, it looks like you're kind of expanding the thesis into Fund Two. I looked at the website, and there's crypto, there's gaming, there's AI. Talk about the thesis now and how you're expanding what you're doing, with AI and other technologies in Fund Two.
So the evolution for Fund Two came kind of as a natural extension of Fund One. So with Fund One, and I can say this, we became the most active investor XR. We've done more XR deals than I think any other fund in the last 3 years. And so we've backed most of the category champions, whether it's like spatial design, spatial analytics, spatial video capture. We've backed 3 of the top 20 games in VR right now. So we kind of got that box checked. But as the technology was progressing, we started moving from VR towards smart glasses, right? Where you saw even Meta is starting to pivot hard into the idea of smart glasses, where there's the Orion glasses that they presented last Meta Connect, where essentially you're able to do everything that an Apple Vision Pro can do, but in the form factor of sunglasses. Or one of the big commercial hits was the Ray-Bans, right? They launched the Ray-Bans, where you have the
camera.
The camera in it, you've got speakers, microphone, you've got the AI assistant in it. They just did this again with Oakley. Google announced they're doing glasses too with Gentle Monster and I think Luxottica and like all kinds of other brands. So essentially every glass brand is going to become smart. And why is it important to us? Like, it can seem like a gadget, but the real question is, everybody uses AI every single day, right? By now we're using ChatGPT all day long. At least I am. I know team members are in companies and business, even like, let's say my family, like maybe my mom and dad, they might be researching something, right? They say like, hey, I want to learn more about a subject. I remember when I first showed my dad ChatGPT, he thought it was interesting for golf. He's like, can this coach me improve my golf swing, right? Like, or can I use it to cheat at a trivia night, right? So regardless of who it is, people are using ChatGPT. In the numbers show this was one of the fastest growing consumer apps in history. I think it was the fastest growing consumer app in history. So now the question is, okay, we use this on our desktops, we use it on our mobile phones, but how do we take this with us truly 24/7? How do we make this enable us to make us smarter, faster, better? How do we enhance the world around us? And when you run the experiment, you really think about it, glasses are the ultimate form factor. Why? Because it allows AI to see what we see. It allows AI to hear what we hear. It allows AI to talk to us. And it allows AI to show us things and enhance the world around us. And, I've thought about this so many times where, like, people say, oh, but glasses are stupid. We're even getting LASIK. I get that part. But then they say, well, why not just AirPods with a camera? Well, women have long hair covers the AirPods, right? Or you have a pendant flips around all the time, so the camera is covered. Right. I think people were speculating that John Ive and Sam Altman were doing like a little puck that you put in the front pocket. Not every shirt I have is a front pocket, right? And then you put it down on the desk. But then if I put it down on the desk, I might as well use my phone because the phone also has a microphone. So when you run this experiment, you just realize, wait a second, glasses are just ideal. Why? Because this thing is always back to the ear, so you can always have good audio. And two, it sees what we see. So if you turn your head, the camera automatically turns with you without you needing to use your hands. And to us, that is very exciting because there's a big trend now with humanoids, for example, with companies like Figure, Apptronics. Again, I think Figure raised at like a 40 billion valuation. And, of course, Tesla with Optimus is getting big into that. But the reality is their production capabilities are very limited. Figure says that they think they're going to deploy 100,000 humanoids by 2029. That is, that comes out to less than 25,000 a year. You're not going to replace the human workforce with that anytime soon. Meanwhile, these things commercially cost $300 today. If you may do them enterprise in bulk, you probably can buy them for $100 a pop or less, which means if you want to make your existing workforce smarter, more connected, more efficient, right? You can do that today with smart glasses, right? And so the thesis for Fund 2 to bring it all back essentially is human AI integration. How do we really merge those two, right? And there's also the idea of human-machine interfaces and interaction. And so this includes things like smart glasses, brain-computer interfaces, like, for example, being able to have sublingual communication, meaning you don't have to speak anymore, but you just think words, and essentially the electronic emissions that your muscles create are enough for technology to pick it up and then communicate to your device. And this might all sound sci-fi, but it's like we're actually.
It really is. It's interesting because I love all the things you talk about. Because like you, when I was a kid, I was a big Star Trek fan, and all that leading technology that the things that we saw on fiction a generation ago are now fact. 100%. Which is fascinating. So obviously, you really done a deep dive in the tech and are passionate about the tech. So as an investor, I always ask investors, okay. Everyone's got an AI company. Everyone's putting an AI extension at the end of their name, kind of like the .com in the 90s. How do you pick the winners in this field of AI? Is it the entrepreneurs? Is it the tech? What are some of those deciding factors?
So I think there's two different buckets for this. The first bucket is you want to back companies that are creating entire new categories, right? And so the two examples I can give, there's again, one company we backed is called Mentor Labs. We just backed them in March. Probably they haven't announced it. They're going to announce it tomorrow. So I guess by the time this comes out, it's public. They raised, over $8 million seed round. Probably one of the biggest seed rounds of the year, backed by, Y Combinator, the founder of Android, actually, Rich Miner, Toyota. There's scouts from A16 and Sequoia and so forth. And so, we're one of the few VC funds in this round because they're building the operating system for smart glasses, where there is maybe a dozen different smart glasses out there, but they're all got their own little software product that is rather underwhelming. So said, we're not going to make the hardware. We're going to create the actual developer SDK so anybody can build apps for smart glasses, and we can power all the hardware. We're agnostic, right? And so why is this? How does this tie into AI? Well, all the AI apps, again, live on this. So for example, they will have apps like there's an app called Mentor Merge, where I wear this. It listens to our conversation. You mentioned something that maybe like you mentioned a term of a jargon, right? That I don't know. It will give me a quick definition without me asking for it. It just intuitively knows what would be a good enhancement to our conversation, right? So here we're not backing one app because I think the app layer to some degree is getting condensed where like agents can do most of that work itself. We're betting a whole operating system. We're betting on a whole app store, right? So it's a platform play. Yeah. So I think, again, with this, you create a whole category. And we're looking at similar things in BCI, right? Like where we're back to companies like Neurable, essentially is creating an operating system for the brain where like it collects all your brain data and then you can do all kinds of cool apps around that. So these are category creators. The other bucket, I think, for AI is you have to find this in the Venn diagram, this sweet spot in between a product that has a large enough TAM to venture scale returns, but it has yet to be so niche that the foundational models will not come after it. And I think that is a shortcoming that most AI startups suffer from, is that they go after something that makes sense intuitively. Like, let's say, for example, like AI voice, right? I would go as far as predicting that there is a double-digit chance, like a 30-40% chance, that a company, even like 11 Labs, that is a unicorn company, will eventually go out of business. Why? Because it is such a core functionality that likely an incumbent foundational model will just offer in-house, right? And you saw this a few years ago. Like you had a lot of video models, like whether it's like Runway, for example. Runway was one of the front runners, or even Midjourney for image creation, right? I don't have the stats real time right now, but it's my understanding that Midjourney's traction is declining now that people can just do it directly inside OpenAI. Like you just creating an image versus jumping over to Discord and using Midjourney, or you can now use Sora or Google VO3 instead of having to use Runway, right? So if you're going after a very broad use case like generating video, generating voices, right? Like to me, that's very tricky. And the only way to compete then is to be at the highest tier of quality, where, for example, the average user, yes, they will use, let's say, a Gemini product to create voice. But if you're a movie studio, right, or you're creating a song and you want the best of the best quality, there's probably a very fine-tuned and also like very white glove enterprise service level product. So we try to operate again in these segments where we don't believe the foundational models will try to expand to. And so, for example, we backed a company called Ludus AI, Ludus. They're essentially a full developer toolkit for Unreal Engine. So everything that like a Cursor does, Cursor, Windsurf, and so forth, right? Like for developing apps and writing code, right? With AI assistants, they're doing all of that, but for game development and for 3D creation, right? And so what are the odds that OpenAI or Google are going after, game development? The odds are pretty low. And even if they do, the company at least probably has a 2 to 3 year runway to build and grow and become relevant enough. And then if the incumbents choose to go into that space, the odds are actually pretty high that they might acquire Ludus.
Exactly. Yeah, you make a really good point, because, now obviously after AI's been around for quite a while, and it's all about the LLMs. Now it's about really building clearly defined applications to solve niche problems, like you mentioned. So how are you getting deal flow? I mean, where are you finding the companies? What's the background of some of the founders, that you back?
We try to come in extremely early. So about 33% of the deals, we are the first investor in ever, like even before any VC angel. And then about 50% of the time, we are in the first round. So we might not be the first person to put it on the map, but we are in the first priced round, first save. How do we find them? I think there's 3 core, we've got many channels, but in terms of like where does most of the deals come from? One, founder network has been huge. At this point, we've backed over 30 founders, and good founders tend to know each other, right? So those set down also to be the highest signal ones, because you have somebody that's very smart and knows the space in and out, and for them to put their own name on the line, they diligence it a little bit themselves, and then they send it. So we found some really great deals that way. I think the 2 other ones that just have been the most fruitful, much more so than like from other VCs, because I think other VCs, a lot of times they try to keep their companies funded more so than like sending the best deals, is top down and bottoms up. So top down would be, we're actually spending some serious time thinking about, okay, like with all the shifts happening, right? What are new areas that are now about to be unlocked that weren't possible before? Like what is the thing that everybody talks about today? Instead of betting on the thing that everybody talks about today, what does that thing actually open up and unlock, right? So the way I visualize this, maybe this makes sense to some but not to others, is like in a video game, there's a skill tree, right? You can't jump to this skill, you first have to unlock this one. And once this becomes open, new pathways open up. So I always try to think 1 to 2 degrees out. Usually you only have to think 1 degree out and say, okay, well, now that there's things like Cursor, what could come next, right? Now that there is something like, micro LEDs, like what does it mean for classes? Or now that there are the first commercial smart glasses, what kind of apps could be built on it, right? So taking this top-down approach and really forming a thesis, and then just saying, like, for example, back in Fund 1, we realized look, VR is having a moment, but for it to grow materially, there needs to be industry standard design apps. Like, what is the Figma of XR? We need to find it out. Like, what is everybody using to design and build their apps and prototype them? And so we looked at everybody in the market space, right? And we identified a company called Shapes XR, where we realized like that is used by virtually everybody, from like, the biggest fitness apps like FitXR, the biggest meditation apps like Trip, to the enterprises like Meta, ByteDance, Accenture, Microsoft. We're like, that is the horse we need to be betting on, because when spatial computing takes off, everybody will be using this product, right? So this is the top down. The other way is bottoms up, which I think is particularly useful for pre-seed, which means you just have to be in the weeds. You have to be a super user of everything you invest in. So I've discovered VR apps by just playing every single app on the Quest App Store. If there's 1,000 of them, we probably tried over 300 of them, right? Or one of my analysts, Daniel, he's big in AI. Every month or every 2 months or 3 months or so, Daniel makes a market map of all the startups building in AI. His market maps, they get quoted everywhere. They're like in newspapers, and like they get shared around. But and what that leads to is people then reach out to him like, hey, we have a startup. Please include us in your next market map. Like you should learn about us. And also he kind of becomes like a little bit of a focal point where he tries everything out and thereby knows the founders. And so a company like Ludus, for example, the one I mentioned, the co-pilot for Unreal Engine development, he met because he became friends with one of the top content creators in the Unreal Engine development space. And so the guy said, hey, I tried this tool out. You should take a look at this and diligence it, right? And so we became the first investor, even though they'd never raised before.
I'm so glad you said that, because, so many investors that I've talked to over the years, they invest in companies and they've never even tried the product or service. And I'm so glad that you start with that, because you obviously understand the product and you've already confirmed, some product market fit. Then you make that investment, which is great. So,
quick comment on this, because it came up last night. I find you get the highest signal by being a super user for two reasons. One, you get to see through the bullshit. You get to see through the smoke and mirrors. No matter how much tech babble somebody has, if the product sucks, it doesn't matter. And secondly, by being a super user, you actually know it works. The irony is some of the best investments I could have done that I've never done were things I was an early adopter from. The biggest story I have is like I was on the pre-launch waitlist of Robinhood because I was an early trader. I was trading back in 2013, and so like I still got the emails from like maybe 2014 or so that like Robinhood is about to go live. And I checked yesterday, I could have invested in Robinhood, if instead of being a user, if I just invested in things I used, I would have invested in Robinhood like at 40 million, seed round. And today it's worth 80 billion, 70 billion, right? So by just being a super user and investing into things that work and that the industry loves, I think that's how you win.
So you come in really early, obviously on these leading technologies. What's the average check size for an investment?
Yep. Fund one, we were still a little bit, finger in the sky, like, how much do we like this company? How much do we want to bet on? Since then, we've very much structured this super cleanly, where we say, fund two, the first check is always, call it 300 to 500K. That's our entry size ticket, which is big for pre-seed round, because in a pre-seed round, that means it gets us 6%, 10% ownership already, because we come in at a 5 million valuation. It might get us less if the company's raising at 15 plus, but that allows us to get some exposure and some skin in the game, and then really get to know the founders and see who is a player, who can navigate market cycles, who can actually build and pivot and really deliver on the milestones they're setting. Because I think anytime you're being pitched, it's a dance, it's a presentation, but the true colors show after you've invested. And so after we invest, we try to really build a relationship over at least a year and a half, and then the goal is to follow on materially with $1 to $2 million in the next round, very likely even lead the round. And so to us, that is the way to then get meaningful exposure. We're talking 10, 15, 20% of the best companies by the time even the seed round is over.
So let's flip. Let's talk to LPs and potential LPs. So what's the makeup of some of your investors? Who are they? Not by name, but you can if you want. In fund one and fund two, who are your co-investors and your LPs?
Yep. So in fund, we have about like 6 fund of funds at this point. It's I would say maybe depending on if you count amount of human, meaning amount of LPs or amount of capital, so in terms of LPs, we've got like 64 LPs in Fund 1, which means 10% fund of funds, and then maybe another 10-20% family office, and then a lot of high net worths. If you talk in terms of capital, of course, it's materially higher tilted towards the family office and the fund of funds. Because I built this firm like one step at a time, we do have a lot of high net worth individuals that found us along the way, really believe in us, and are investing alongside us. One of the, also worth mentioning is the biggest allocator is me. So because I've done really well with the hedge fund, we earned quite a lot back in 2020, 2021. I am putting my own skin in the game, meaning not just like symbolically, but rather most of my net worth is in my own funds because I believe in what we're doing, and I think that has a much, much higher return than me owning the S&P 500. I think it is a much, much higher return than doing something passively, and so I put about 10% of the capital up for all my funds. And so right now because Fund 1, was mostly raised from some fund of funds, high with individuals. Fund 2 currently we do in a institutional raise where we're talking some of the biggest fund of fund names, all the names you probably know. They're currently in diligence to see, because we were trying to raise a full $50 million. So Fund 1 was 15, and now we're raising 50 with the first 10.
Talk to me about the current fund and to the potential investors, LPs, family offices, RIAs that recommend alts. The question I like to ask everybody is, why your fund? Why now?
100%. I think two reasons. One, in the age of AI, very few companies will generate most of the returns. And the way you generate outsized returns, I think, is investing outside the app plane. You invest in new platforms. And so that's something we're chasing. We're looking to bet on whether that is the next category creator in XR, the next category creator in BCI, where those are actual Deca unicorn outcomes, where there aren't that many anymore. Of like, who's actually capable of pulling something like that off. So one, while everybody's chasing the next cursor, like look at your portfolio of fund managers, look at most of the VCs. In fact, look at the most recent batch of Y Combinator. The term cursor 4 was mentioned like 20 times. And I discussed this yesterday with somebody where I said, when Facebook came out, everybody was chasing the next Facebook. They're deploying billions of dollars into, for example, Clubhouse, right? When Uber became successful, they're looking for the Uber of, right? The reality is the next Facebook doesn't look like Facebook. The next Uber doesn't look like Uber. The next Cursor or OpenAI doesn't look like OpenAI. And so to us, we're planting the seeds today in the categories that are able to essentially win in the age of AI. Because again, we're one step ahead and we're saying, okay, so in the age of AI, two things will happen. If humans will want to continue to be able to compete, they will need to upgrade themselves. How are you going to upgrade yourself in the next 5 years? It is going to be AR, it is going to be new form factors, it's going to be BCI. That's what we're betting on. And the second piece to the thesis that we didn't talk about earlier was in the age of AI, we're going to be working less. We're going to have more time and we're going to have more disposable income, which means we're going to need more. We're going to be chasing meaning, challenge, and connection. Again, that is where virtual worlds come in. That's where gaming comes in and so forth. And both of these spaces tend to be some of the most underloved and underallocated spaces in the tech space, period, right? So most investors have very few dollars allocated. So why now? We've spent the last 3 years building expertise, networks, and founder ecosystems in the space, and became a leading brand, being the biggest allocator in XR over the last 3 years. So we're best equipped to win in this upcoming revolution and have our stake in the next Deca unicorns.
Fantastic. So a couple final thoughts. Any final thoughts? Anything you want to say? Any breaking news? Any theories about the future that you want to share with our listeners and viewers today?
Interesting. I think this is more like macro commentary. The world seems to have been very crazy in the last, I was going to say a few weeks, few months, and so forth. And a lot of times you think about like, well, how does everything play out in between, Iran, Israel, or Ukraine, Russia, or the US, all these various conflicts are going on. But I think the much, much bigger play over, like if you've questioned the 5-year time horizon, is actually AI. Everything else will seem like noise, right? Everything else will seem like noise. And the much, much bigger war to win, so to say, is is the AI revolution. This also applies to things like inflation. I've been writing about this since 2017, not 2017, sorry, it was like in 2022, when the whole markets were in a downtrend, and I said, everybody's talking inflation. That's the biggest story in the world right now. But we will laugh at this in a few years. Why? Because the real question will be unemployment, because AI is going to take more jobs, and B, deflation, because AI definitionally is deflationary. AI will drive the price of goods and services down, and we're already getting into the 2% range of inflation, and it's tapering off. And if you just put some AI accelerationism in there, we're actually going to be deflationary. So you're going to see interest rates come all the way down, and that just changes the whole funding environment. The funding environment is almost an opposite mirror image, so to say. I mean, because like a mirror actually mirrors something, meaning it's a 180-degree change is what I'm trying to say. Where in 2020, 2021, everybody was saying, shoot for growth, shoot for new form factors, like shoot to grow as fast as possible and win on potential. We now flip completely the opposite, where it's like everything is a revenue multiple, and actually we're very strict when it comes to revenue multiples. Like in VR, you can get 3x revenue multiples, which you don't get anywhere else. But they're completely discarding of, revolutionary new technologies, right? Whether that is XR, BCI, and so forth, because again, everybody's so de-risked. There's an all-time high in money that is sitting in treasury funds. $7 trillion is in money markets, right? And all that is going to be shifting back, in my eyes, next 3 to 4 years, and it's going to chase growth. And so you have to ask yourself, what are pockets of growth that have not been explored in the last few years? And I think that is where you have to be allocated to. Particularly, those are things that are not going to be disrupted in the age of vibe coding, where any 16-year-old can recreate your app in no time, right? So there are moats in deep tech. There are moats in having actual IP. There are moats in creating network effects of, for example, like, having thousands of developers built on your platform that can't simply be replicated with the click of an AI query, essentially. So I think that's a way to think about the world. Like, you have to think about how defensible is your portfolio, when AI changes a lot of these things, both when it changes how businesses are built, how products are produced, how people are employed, how people are spending their money. All these questions need to be answered for you to have a defensible portfolio.
Fantastic. So, Felix, where can people learn more about Hartmann Capital and learn more about yourself?
Yep. So best places for website is hartmanncapital.com. Hartmann has 2 N's. So hartmanncapital.com, you'll find everything about our funds, our portfolio. You can learn more about our companies we've backed. And then I would say Twitter is pretty good. Twitter, I'm at Felix O. Hartmann, O as in Oliver. And I share some insights there. And you can also, if somebody wants to learn more, you can find our email on the website. You can send me a DM on Twitter, and I'd love to chat more.
Fantastic. Felix, that was just fascinating. I really love this conversation today. It's like, I feel my head exploding with all the new tech. I feel like I'm already in, 2055 or something like that. So, Felix, thanks for being on the show. And for everyone listening, make sure you listen to Felix, be on the cutting edge of what's happening in all things tech. Again, Scott Kelly, Emerging Manager Podcast. Felix, thanks again for being on the show.
Thanks for having me, Scott. Take care.
Oh my gosh, there was so much stuff to unpack there, Scott. I think you touched on everything. There was a part where you were talking about, Minecraft, Fortnite, Roblox, spatial internet, which is the 3D economy, creator economy going on there too. And then you're heading to crypto and all kinds of other areas.
Yeah, it's interesting. It's great where you pick up some information from time to time. I remember it had to be, maybe 8-9 years ago, I was sitting in my house and my then 15-year-old son walked up to me and goes, knowing a very cursory amount about what I do for a living, Dad, you got to get into esports. And I go, what the hell is that? That same weekend I'm watching, the League of Legends Championship, and there was a $14 million prize pool. I go, oh, okay. So 3 weeks later, I invested in an esports team. So, but he understands it from a total global interconnected standpoint. He understands Web3 as it applies to gaming. He understands AR and VR as it applies to gaming. He understands, crypto as an opportunity to better monetize and be more efficient about this technology. And then, obviously AI is the flavor of the month, but it's going to be the flavor of the next generation. And he understands that too.
Yeah. And I thought that his take on AI, comes from this place of having been watching the VR companies, comes from watching that sort of segment of the gaming market where he has his eye on that already. Because when he's talking about Neurable, Mineral Labs, 11 Labs with voice, which I think they do a killer job over there, developer toolkits for Unreal Engine, like all of those like little things, but they interact in a way that make the AI space functional, make it useful, make it work.
Agreed, because AI has been around for quite a while. It's obviously becoming the next thing for the next several generations, probably forever. But he really understands how to apply AI. And that's really the key going forward. In the beginning of this whole AI journey in the last couple of years, it's been about the large language model. It's about what engine can you build? But now it's like, what can you build with that engine? And I think he really understands that from a gaming standpoint and, from an AR and VR standpoint.
Well, and he mentioned that he called it a bottoms up approach, which I thought was just such a great, I haven't heard that one in anyone we've interviewed so far, but that they're super users of the stuff that they invest in. And that's rare.
Yeah, the reality is, he doesn't have to worry about product market fit. It's already there. There are billions of gamers. There are all kinds of people that are using, VR and AR. I mean, based on the date of this release, we just had a major, crypto bill passed in our government here. So really legitimizing the industry, from a national standpoint versus a sector standpoint. So, he understands, I like to tell people, don't build a product and try to find the customers. Find the customers and build a product for them. And he understands that.
Yeah, exactly. And I think that even his check size funding model, like all of that he was outlining, fits with that understanding. Because what they're, you don't hear much when somebody writes a $500,000 check that they only take 6 to 10%, right? You hear that as an outsized, which then hampers the future rounds.
Right.
And that's not what they do because they know they're in it for that big future round.
Right. And that's the key. I think, as we've been learning over the course of the last several episodes and our listeners been hearing, venture capital is changing, the nature of it and how people invest and why they invest. And, I think sometimes there's a turning point in venture capital right now and where it's going forward. And I think understanding that, be in the right place, but also do it the right way is really critical going forward.
Yeah, absolutely. Well, I think there was some really interesting things to watch that I hadn't really thought of, and this idea of, I think, especially I just did an AI conference, so I was just doing a case study about some of the work we're doing, and so much of it was just like, here's the automation we're doing, and and it's just like taking little tiny pieces of AI and only using them to do one thing, and there's all this money flowing through that, and I'm thinking, that is not where it's going. That is not where the really big money is. There's a platform play. There's, what he's talking about, these brain-computer interfaces. There's a bigger play here, and somebody needs to be working on it. And thank goodness Hartmann Capital is.
Right, yeah. He obviously understands that a lot of money is flying into AI. Yeah, I was around when a lot of money was flying into the dot-com boom. You have to invest in more than a domain extension. You really have to invest in companies doing really real things with this technology, and Felix understands that.
Yeah, and I think the idea, though, that you're a super user of something makes it you critically understanding that what's missing in the process. When we were super users of 3D printing, for example, we could see very, very clearly that no investment was flowing in the model creation side of things. And that was going to hamper the growth, right? And we could see that. He can see that from...
Right. For being a fan of gaming, he can invest from a user consumer standpoint. Yeah. And I think that's critical. Sometimes if you're in an ivory tower and you invest in a company, you don't know who the ultimate customer and consumer is. He is one of those customers and consumers. So he comes in from, okay, this is what I would like. Are you creating something that I would like? Because I'm like my millions of friends around the world doing the same thing online.
Yeah. And I think he's also really realistic about it. Like these investments take the time that they take. Yeah. They maybe need other companies and surrounding companies. That's why you need a portfolio of them to grow. And you might go through an actual dip in the marketplace and all of these things. And you've got to get through that. But when you get on the other side, you're the player.
Right. Yeah. The reality is, gaming and esports, had their day, fell back, coming back now. Obviously, I have 2 old sets of VR glasses that I used 5 or 6 times, and they're relics, and now that's coming back. So you have to understand that there's going to be dips and trends, and understanding those dips and trends is important to be successful.
Well, Felix Hartmann certainly has his finger on the pulse of what's going on in this tipping tech, if you want to call it that way. And I look forward to seeing and following him. And if you want to follow him, all the links to follow him are in the blog post for this episode at emergingmanagerspodcast.com.
Join Scott Kelly, Tracy Hazard, and their high-performing capital fund manager guest next week on the Emerging Managers Podcast. Don't miss our upcoming virtual and live VC Fast Pitch and podcast events. For more details, background on our guests, or an application to be our next guest, visit emergingmanagerspodcast.com. Don't miss out on shaping the future of venture capital and entrepreneurship with us by joining our robust community of innovators and investors today.